This chart is the standard battlefield for retail traders, a continuous 5-minute candlestick layout. By chasing these visual shapes, you trade on delayed information. Standard indicators process this price history and output a moving average or a baseline. They are mathematically forced to react to what price has already done, entirely missing the immediate pressure driving the current tick. Relying on these historical shapes places you at a permanent structural disadvantage. You are reacting to the exhaust of a move that has already been executed. Market makers and institutional algorithms do not read these visual chart patterns. They do not care about a perfect flag or a wedge. Instead, institutional capital executes strictly when precise underlying mathematical thresholds are crossed in the order book. To operate on that exact same level, we engineered the V8.4 C-Wave Sniper upgrade. This system isolates the subchart engine room to detect those exact mathematical thresholds the moment they are breached. We are going to reverse engineer the 3 systemic upgrades driving this model: dynamic velocity acceleration, institutional decoupling detection, and zero-lag volume baselines. By abandoning the practice of visual price chasing and moving exclusively to mathematical subchart tracking, you finally align your execution with the temporal plane of institutional capital. To begin, we need to strip away the main price chart entirely and look exclusively under the hood, directly into the isolated subchart engine room. A standard momentum histogram fails because it calculates an absolute value. It only registers whether price direction is generally moving up or down. The V8.4 architecture abandons absolute directional tracking. It measures kinematics, the actual physics of market movement. This animated diagram shows how we measure the second derivative of momentum, the rate of change of the rate of change. We wrap a 5-period dynamic delta envelope tightly around the outer edges of the histogram bars. It continuously calculates this on every incoming bar. If you see a sudden, aggressive visual price drop on your main screen, but the subchart delta envelope is not breached, you are looking at a low-juice trap. The visual price is moving without actual underlying institutional pressure. The exact trigger fires only when microsecond institutional pressure accelerates faster than its moving average, violently breaching that delta boundary. Those high-intensity flashes of neon line and hot magenta are the visual confirmation of maximum unconstrained algorithmic acceleration. A dull, muted bar means empty price movement. A bright neon burst means the heavy machinery has engaged. Calculating this dynamic velocity ensures you only put capital at risk when the institutional accelerator pedal is mathematically pinned to the floor, entirely filtering out low momentum traps. This split-screen layout illustrates the most destructive trap in retail trading, the standard price breakout to a new high. When price breaches a resistance level and prints a higher high on the chart, it triggers immediate emotional buying from retail traders afraid of missing the next leg up. We built the multi-wave decoupling protection module to act as a mathematical shield against that exact emotional response. The engine continuously records the momentum footprint of previous price waves. Here, we establish a baseline by marking the exact midpoint of the historical Wave A peak. Our mathematical rule is uncompromising. Any new momentum wave must cross a strict 50% threshold of the preceding Wave A peak to validate a structural breakout. Look at the reality in the engine room. The top graph shows a fresh price high, but the underlying histogram stalls out completely below our 50% threshold line. This exact mathematical divergence is a decoupling event. Price has completely disconnected from underlying momentum. The system instantly visualizes the structural failure by bleeding the histogram bars into a flat, dull slate gray while triggering an alert overlay. That dull slate warning is definitive, machine-level proof that the structural engine has run completely out of gas. When the machine mathematically flags a decoupling event, you must ignore the visual price breakout on the main chart. Comparing current momentum against historical thresholds creates a mandatory circuit breaker, preventing you from ever buying an exhausted top. The final structural upgrade addresses latency. We must fix the delay in volume surge detection. This diagram isolates the core flaw in standard volume tracking, the simple moving average baseline. Notice how flat and rigid this line sits across the vertical volume bars. The mechanical friction of a simple moving average is that it assigns the exact same mathematical weight to an institutional block order from 20 bars ago as it does to the current live tick. This equal weighting artificially bloats your baseline. A massive current order will not register as a surge because the old heavy data is still pulling the overall average up. We engineered this out by deleting the simple moving average and hard-coding an exponential moving average baseline in its place. This exponential moving average heavily biases recent real-time data, entirely ignoring the ghost of historical block orders. During quiet market periods with low liquidity, this new baseline floor drops rapidly, dynamically adjusting to the lack of volume. When new institutional capital suddenly hits the order book, the low EMA floor ensures the fresh bar clears the threshold instantly with massive overhead clearance. Clearing this dynamic floor generates a completely lag-free trigger for the C-wave transmission. By replacing a static historical average with a dynamically adapting floor, you capture capital inflows the millisecond they occur, rather than waiting for an old average to catch up. Pulling back to the fully assembled V8.4 interface, we can see exactly how these three mathematical modules operate simultaneously. We avoid failed trades by relying on the dull slate decoupling warning to reject visually convincing false breakouts. A valid entry is identified during a deep price pullback, triggered precisely when dynamic volume instantly clears the adapted exponential moving average floor. That setup is then mathematically confirmed when isolated momentum breaches the delta envelope, flashing the neon lime acceleration signal. Combining second derivative velocity, strict momentum thresholding, and dynamic volume floors systematically eliminates the need for human guesswork. The current market environment actively punishes trading ego and arbitrary predictions. It only rewards strict execution precision based entirely on quantified data. Stop guessing where the market will turn. Trust the raw acceleration mechanics of the engine. Keep your windshield clear and execute without hesitation.